Hello everybody, what's going on? So today we have a wave of fresh data, major market catalyst, and a brand new vehicle that is completely changing the thesis for this stock. If you have been watching the market lately, there is a ton of noise, short-term panics, and misleading headlines floating around. But as smart investors, our job is to block out the noise, look directly at the hard data, and analyze the strategic move the company is making. We have started by pulling up some critical new data that gives us a clear window into how NIO is actually performing on the ground. Let's look closely to this file. This is a leak summary of latest weekly new order data for electric vehicles in China, compiled directly by Goldman Sachs Investment Research. Now, if you glance at the surface level numbers like a lot of retail investors do, you might see why the bear tried to spin a negative narrative last week. If you track the week over week metrics for the week 26th, which covers from the period from June 22 to June 28th, NIO logged 11,600 new orders. That is a drop from 14,450 orders they pulled in week 25th. As noted by analysts at Deutsche Bank, this week-over-week cooling happened because NIO officially withdrew its 10,000 yuan sales tax subsidy. Naturally, whenever a manufacturer pullbacks a major financial incentive, you are going to see a temporary pull-forward effect settle down, causing a short-term dip in immediate following week. Wall Street algorithms see a week-over-week decline and try to push the stock down. But let's look at the real story hidden behind. Despite that temporary subsidy driven week over week drop, NIO still firmly ranked in the top 3 among major new energy vehicle players in China. Look at who they are beating. They are actively outperforming Tesla, Li Auto, XPeng, and these latest registration blocks. Tesla bought in 11,200 orders for that exact same week. Meanwhile, NIO literally beat Tesla out in weekly order volume in this segment. When you shift your perspective from short term week over week volatility to long term year over year momentum, the numbers become absolutely staggering. When we will look at the year over year row for week 26 on that Goldman Sachs chart, NIO's weekly orders didn't just grow, they exploded by 132% year over year. Now let's put that into perspective by comparing it to the rest of the market. For that exact same week, Tesla's year over year growth was flat at just 1%. Li Auto was up 30%. Meanwhile, newer hyper entrants like Xiaomi actually saw a brutal 26% drop week over week, with their momentum rapidly cooling off. If you look at the month to date data for June, NIO pulled in a massive 73,500 orders, bringing their total 2026 year to date volume to a commanding 271,000 vehicles. What this data proves to us as investors is that NIO's underlying demand is incredibly resilient. They do not need to rely on aggressive margin crushing subsidies to maintain a dominant position in the premium EV market anymore. They pulled a 10,000 yuan incentive and they still outspaced Tesla and stayed at the top of the leaderboard with triple digit year over year growth. This isn't weakness, this is a massive brand pricing power and structural strength. But the Goldman Sachs data is only the baseline for where NIO is heading next, because a massive product catalyst is about to drop that is going to supercharge these order numbers even further. Let's transition to next piece of the puzzle. What you are looking at right here are the first official actual photos of highly anticipated ES8 5-seat version. The file confirms that this ultra premium 5-seater version is officially open for pre-orders right now and is scheduled to formally launch on July 9, 2026. This is a massive strategic masterclass by NIO's product development team. Think about the luxury SUV market right now. For years, manufacturers have assumed that a flagship full size luxury SUV has to have 3 rows of seats, either a 6 seat or 7 seat. But as highlighted in this picture, NIO deeply analyzed real world consumer behavior and realized a critical pain point in 99% of the 6 and 7 seater SUVs driving on the road today. That third row seat is completely left unused, gathering dust while permanently sacrificing valuable cabin comfort and storage space. By eliminating that unnecessary third row and engineering a dedicated ultra luxury 5 seater executive layout, NIO is unlocking an entirely new dimension of vehicle utility. Look at the interior shots. Because they have freed up that rare real estate, the second row features massive executive class quilted leather seats with incredible legroom, dedicated center console, and top tier entertainment controls. This moves the ES8 from just being a large family car to a legitimate executive lounge on vehicle. And look at what it goes for cargo flexibility in the bottom part panel. The trunk space is absolutely massive, showing specialized raking system for high-end sports gear, golf clubs, clothing hangers, and outdoor equipments. This target the absolute highest margin consumer demographic in the market: wealthy professions, executive business owners, and active luxury buyers who want the commanding road presence and storage of a full-size flagship SUV but want ultimate comfort for 4 or 5 passengers rather than cramped seating for 7, they will choose this vehicle. From a financial and stock perspective, this 5 seater variant is going to act as powerful multiplier for new sales number and profit margins in the second half of 2026. Flagship vehicles like the ES8 carry the highest average selling price and the widest gross margin vehicle in entire NIO lineup. When NIO sells an 85 or an Envo vehicle, they are playing a volume game. But when they scale deliveries on an ES8 platform, that capital flows directly to strengthening their bottom line and accelerating their path to total profitability. By diversifying the ES8 into a dedicated 5 seater, NIO is essentially double dipping into a premium SUV segment without having to spend billions of dollars developing an entirely new vehicle platform from the scratch. They are utilizing their existing world class manufacturing lineups and battery swap architecture, but tailoring the interior to capture an entirely different audience that previously might have looked at the Porsche Cayenne or BMW X5. When you connect the dot between these two major updates, the investment thesis for NIO stock becomes incredibly compelling. On one hand, you have the Goldman Sachs data proving that NIO's baseline demand is so fundamentally strong that they can pull back on subsidies and still maintain triple digit year over year growth while outperforming major rivals. On the other hand, you have the upcoming July 9th launch of the ES8 5 seater, which provides a fresh high margin catalyst to drive order inflow even higher right as we enter the third quarter. The bears want you to focus on a minor single week drop caused by a subsidy adjustment because they want to shake retail investor out of their position. But the smart money looks at the macro trajectory. NIO is successfully scaling its vehicle lineup, dominating the premium segment, proving its pricing power, and continuously innovating to capture untapped market niches. The short term volatility we are seeing in the stock price is a classic disconnect between sentiment and fundamental reality. As this new high margin models start rolling out and compounding the already massive delivery total we saw in June, the financial market will have no choice but to revalue the stock much higher because the fundamentals are locked in. The product pipeline is executing flawlessly, and the data proves NIO is winning the EV race where it counts. That is the reason why I'm incredibly bullish on where this company is tracking for the rest of the year. So prepare now. With that said, thank you so much for being here. See you in next one.